Welcome to this week's Insights show. On today's show, we're going to be following up. This is the part 2 of the program that we started last week, which is a deep dive into the changes coming in the international energy industry, specifically oil and gas, and the specific impacts that those changes are going to have on Aliyev's economy on the long term. We start off with a Yale University study from 2019, in which it described 2019 as being the year of peak oil. Traditionally, peak oil was thought to be the year where we actually max out on production, because oil is obviously a limited commodity, and at some point we're going to run out of it. And from that point on, oil was going to become an ever more expensive product, but we would have less and less of it. But that's not what happened. In fact, oil is plentiful. We have more oil than we thought. What we have, peak oil now in the current context, is actually peak demand, which is you're not going to have any more demand growing in the long run. And the biggest change heading in the way of the energy industry is actually electric vehicles. And the reason for that is internationally, depending on the country, somewhere between 50 to 70% of all oil use is used for transportation, personal transportation, and trucking by the industry, whether it's trucking and other things, to carry goods around the country or around the world. From a policy perspective, the freight train heading in the direction of the oil industry is called the 3 Ds. The first one is decarbonization, which is the lessening, moving to electric vehicles for most countries to be able to hit their Paris climate goals. The second is deflation, which is the deflation of demand. As that happens, demand decreases. And finally, this new concept that's been developed after COVID is detoxification, when people saw the advantages and how the health advantages of how clean air, how much cleaner the air is once you have less traffic, which is accelerating this process around the world to get carbon-generating cars out of big cities. Let's take a deeper dive into what's heading our way as far as electric vehicles are concerned. There was a Norwegian energy consultancy called Rystad Energy, in which they were tracking the sale of electric vehicles, in which last year, which was obviously a very strange year because of COVID, new car sales, 5% of new car sales were electric vehicles. They expect that number by 2025 to hit 23%. And what they expect, in their words, is that this is going to start putting in a consistent, slow, steady decline and a big hit on the oil-producing economies. At the same time, virtually all of the great auto manufacturing companies around the world, from Europe to the United States to Japan, have very vigorous EV programs to move towards electric vehicles. What's driving this is the national mandates, or in the case of EU, a multinational organizational mandates. And let's look at them. By EU's current standards, by 2030, 50% of all new car vehicle sales need to be electric vehicles. And that number needs to hit 100% by 2035. In the United States, that number is 50% by 2030, very much like the EU, and 100% by 2035, even though I think because of all the catastrophic weather events that we're having, especially in democratic countries, whether it's the flooding in Europe and the giant fires in the United States, I think the political pressure to accelerate these numbers might grow over time. But let's move on to China, which is actually leading a lot of the research and the prompt move towards EVs. By 2030, they have a 50% mandate also. And in Japan, all cars have to be electric by 2035, and they're in fact ahead of the curve. Last year, 40% of our new car sales in Japan were EVs. Let's look at the oil producers and what impact this is going to have on them, starting with Aliyev's economy. Looking at the impact that electric vehicles and the lessening of demand is going to have on the oil industry forces us to go look at that industry more closely. The key variable in that industry is actually production cost. What people don't usually comprehend is that there's actually a lot of money that goes into spending to producing a barrel of oil, and that is not equal between different producers or different countries around the world. There's actually 3 levels of producers. The most expensive oil is drilled in the Russian Arctic region, in Canada, and in certain parts of the United States, and that cost comes in somewhere around the $40 a barrel range, which means normally you need oil to be above $70 and above for it to be worthwhile to be drilling there. Then there's the mid-level cost producers, and this is where Aliyev's economy, Aliyev's oil industry fits in, and they're somewhere in the mid-20s. And then there's the absolute low-cost producers, which is countries like Saudi Arabia, Iran, and Iraq, which have production costs of less than $10, which means as the prices go down, the first layer producers were the first ones to get out of the business. Then it'll start really hurting the second level producers, and the last oil in the world is going to be produced in Saudi Arabia. Now, we're seeing some of this impact already in Aliyev's oil industry. Chevron sold and left the country a couple of years ago, Chevron's being one of the biggest oil producers, oil companies in the world. And Exxon is looking to get out also, and they're selling to smaller, less relevant companies. And if you look at actually the oil majors around the world, British Petroleum, which is the lead in Azerbaijan on the energy industry side, has actually changed its name to Beyond Petroleum, and Shell Oil is actually transitioning to become a hydrogen company from oil over the next decade. One thing that this is going to do, there's a political impact for all this, and not just an economic one, and that is as the use of oil decreases in the primary economies of the world, whether it's China, United States, Japan, and that's more than half of the world's economy, oil becomes the commodity of the poor. And what do we know about the political impact of that is whatever matters to Germany, the United States, and China matters to the world. Once oil becomes the commodity of, it's important to Cameroon and Bangladesh and Haiti, it becomes far less relevant politically, and oil producers become far less politically relevant. Now let's look at the natural gas market, because Aliyev's big hope is as oil is decreasing in his country and it becomes politically less relevant and economically less relevant, the natural gas is going to fill that gap. And this is actually the hope of many energy producers around the world, and there's some logic with that because natural gas is actually the transition gas that's going to allow us to leave carbon eventually. However, there are technological problems that are heading the way of that industry. Last year already, the best renewable prices matched natural gas prices. And the one thing that we've seen over the years is that the efficiency of renewable energies is growing exponentially. So if in today's energy markets, renewables, the best renewables match natural gas prices, it means that in 5 years, almost all renewables will match natural gas prices and do better than that. And we're already seeing the impact of this in the United States. Last year, 75% of all new energy projects that came online were renewable, and 85% of all plant closings were of gas ones. And this is a pattern that's going to continue in other major economies of the world over time as the best renewables start crushing natural gas prices. We're going to transition from here to start talking about what real wealth actually means in the 21st century. And I want to use some analogies. I'm going to start with Aramco. Aramco is the Saudi oil company. This was described many years ago in a national security memo of the United States as the greatest prize in history, the greatest strategic prize in history. That greatest strategic prize in history today is valued at $1.9 trillion, which is the valuation of Aramco. To put things in perspective, one tech company, which is Apple, comes in at a valuation of $2.1 trillion. So you have one technology company that right now in the market of the 21st century is valued more than what was considered to be the greatest strategic asset in the world 50, 60 years ago. To carry this analogy even further, we can look at Facebook. Facebook's valuation comes in somewhere a little under $900 billion. So here you have a silly app in which people use to put what they ate that day or pictures of their dog. And that app, which as a physical body does not exist, is valued half as much at, again, what was considered the greatest strategic asset in history. Now, let's look at this real wealth concept in the, on the side of the Armenian economy. And I'm going to use this example. There are two companies that were started by Armenians or Armenia-based. Both of them are Armenia-based, but one of them is Service Titan and the other one is Pixar. Service Titan is actually began in the United States, but has a significant presence here. A lot of the work gets done here, and is actually founded by two Armenian Americans. And Pixar, which is actually a local company that's always been here with offices around the world. The combined valuation of these two companies is at $10 billion, and they're about to go public over the next year or two. To put things in perspective, the entire national wealth fund of Azerbaijan, which is where they've been putting away their oil money for the use when the oil resources run out, is $40 billion. Once you take out their debt obligations, it's $30 billion. So here you have two companies on their own, and they're worth 1/3 of the entire national wealth that Azerbaijan has been putting away for 25 years. It is estimated by people in the tech industry that we're likely to hit 4 native-born unicorns by next year. Imagine if that 4 or 5 becomes 20. You have a completely different world at that time. In close, the purpose of these two programs is to sort of give us a broad outline and an understanding of the changes that are heading our way and what impact they're going to have on us. However, this is what we need to think about. Whatever happens to our neighboring countries means very little, as long as we, on our own, don't create a competent economy, a state, and military. Our focus should not be on the failures of others. That is their issue. We need to look at our failures. We need to look at where we can do better and to build a competent economy that has economic growth and creates opportunities for all of our citizens. It's true that there are glimmers of hope in our economy, not just on the tech front, on other fronts, and that is very good. However, we should not underestimate the tasks that lay ahead of us, and those tasks are immense. What should be our goal, regardless of anything that happens in the world economy or what's going on around us? And it's one thing and one thing alone. And I'm going to quote the great Deng Xiaoping, the Chinese leader who actually started the reform process that produced today's China. And he had a famous saying, it's to get rich is glorious. That should be our goal. If you get rich, you're a relevant country. If you get rich, you don't get stepped upon. Unless we accomplish that, all of the things that we want are not going to happen. On our future shows and programs and interviews, we're going to have far more specific focus on the Armenian economy and its prospects. Thank you for joining me in this week's edition of Insights.